Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. I wasn't planning to record anything today. I'm still, alhamdulillah, trying to enjoy a little bit of time with the family after Eid, just a little bit of extended Eid. But then I've realized the earnings report has started. Obviously, like I said in the last video, they started last week, and there's so many companies reporting this week. And yeah, as you can see, the portfolio right now is actually gone below £70,000 again, considering I've added, I think, about 400 something just this week. Is actually down quite a bit. But yeah, so what I want to talk about is some of the companies that have reported the earnings this week. I want to show you exactly what they've reported, and the reasons why a lot of them actually down so much, and what I have done and what I'm going to do in the future, inshallah. So it's going to be a quick kind of video where we just chat about the earnings reports and basically what we really think about generally. And obviously, every time this happens, these reports come out, there will be companies that will do really well and go up like 10-20%, and there will be companies that go down 10-15%. So that's normal thing, right? So as you can see, on Monday, quite a few companies reported. None of the companies that I own. Coca-Cola was the only other company that I normally look around just to see what they're doing, because that kind of gives an indication of where they are. But nothing happened with Coca-Cola on that day. I can't even remember, it was either down or up, but it was probably flat on that day. UPS reported yesterday before the market opened, and 3M, as well as PepsiCo and so on. UPS was down quite a bit. 3M was kind of okay-ish. And then last night we had Microsoft, Alphabet, Visa reporting, Texas Instrument reporting. I think Texas Instrument is down today. Visa, last time I checked, it was up. MSFT is actually down so much. And then you've got Microsoft and Alphabet. Microsoft was up quite a bit. Alphabet, I think, was down all flat this afternoon when I checked last. And then this morning we had ADP reporting. Thermo Fisher was actually reported. To now we've got Meta and so on, and Teladoc is reporting, KLA is reporting. You've got MasterCard, Amazon's, the Intels, Cloudflares, and all the other companies. Amgen, Merck is actually reporting as well. So we've got still loads of basically companies reporting, but the ones I want to focus is the ones that I own in my portfolio, and MSFT as well. I want to see what happened to this company because it's down so much. I think it's down off 20-something%. So let's start with UPS first, and then we'll take it from there. So UPS reported their earnings, and looking at this, okay, they have missed both the top and the bottom. So they missed the EPS expectations. When we say missed, by the way, we're talking about the expectations that the analysts were, basically what the analysts were expecting against what the company reported. Okay, so the company comes out, obviously they have said this is what we think where we will be. Analysts then will say this is what we expect from the company, and if that company does not meet the expectation, then obviously things will go completely south. And this is probably one of the things that happened with this company. So they missed the EPS by 0.01 dollars, right? And then in terms of revenue, they missed it by 880 million. Okay, so, and they're down for the year on year, basically about 6.1% down on year in terms of their revenue. Now, one of the reasons why it's down so much is not because of this. This sort of happens, but then it's the guidelines, basically the targets for the year. That's one of the reasons why this company is down, and the comments basically the company has made in terms of about the future, if you like. And this is one of the headlines that basically one of the articles that I found on Seeking Alpha. It says UPS stock drives lower as earnings under-deliver basically guidelines and disappoints. Okay, so they have under-delivered and they have somehow guidelines they were disappointing, and this is the major part. Okay, so we already know that they've missed the basically top and bottom. Okay, so we're not going to focus on that, but this is the one that we need to focus. This is the bit that I need you to understand, and if you want to pause the video and read it through, then feel free to do that, because that is what basically the CEO basically of the company has said. And we already know what's happening in the US. Okay, people are expecting obviously some sort of a recession. People are expecting the sales in the things like that to decline. Okay, it's going to be apparently doom and gloom. So he says in the first quarter, deceleration in the US retail sales resulted in a lower volume and than we anticipated. So the company were maybe expecting higher volume, so basically higher delivery. So they were expecting people to be buying loads of stuff. UPS basically going left and right, delivering all sorts of amazing things to people and so on. But obviously, if the situation has slightly changed, people are more worried about where their next paycheck is going to come through. Although the US unemployment is actually quite low, people might be thinking, do you know what? I don't need that product. I don't need Amazon to deliver. Basically, I'm to order anything from Amazon right now. I'm going to focus on just keeping a little bit of money in the reserves just in case something happens. Okay. So it says we focus on controlling what we could control and delivering first quarter consolidated operating profit and operating margin in line with our base case targets. So in line with our base case targets, okay, not what the analysts expected. Given the basic current macro conditions, we expect volume to remain under pressure. And I think this is what killed the stock on that day. Because what they're saying here is because of the situation that we're in around the world right now, okay, the macro conditions, we expect the volume to remain under pressure. So maybe less people will start ordering. We're not going to deliver as much. Then that means we're not going to get as much revenue, as much EPS. And for that reason, obviously, there will be a decline in the business maybe in 2023. And then it carries on. It says, over the first quarter of 2023, the global volume environment deteriorated due to the challenging macro conditions and changes in consumer behavior. Now, that's exactly what I was talking about, the consumer behavior. People are no longer happy to order stuff from Amazon and get it delivered. These are COVID times where everybody was getting delivered. UPS price was absolutely amazing. The revenue was great. Have a look at their revenue during that time, okay? And it says that as a result, UPS expected full year revenue and adjusted operating margin to be low end of basically of its previous guidelines. Now the range they had before, basically what they're saying is it should be lower end of its previously guided range. Okay, so the earnings release status. So this is basically what the company have said. Combine these two things, we're saying we're probably not going to make as much as we thought because of the volume to be basically under pressure and so on. And we've already said that, okay, based on what we had initially basically predicted, we think we might get the low end of that rather than the top end, whatever what we normally do, okay? And this is only for 2023, right? We already in April of 2023. So another 8 months or so left of this year, and then that's a doom and gloom. That's basically, that means we're going to completely and utterly sell this stock. Is that what we're going to do? Okay, so this is my take on what's happened to UPS, and this is a great company. This is not a company that's just going to disappear, okay, despite what people tell you and, you know, Amazon and all of that stuff, right? UPS has been around for a long time. It's mainly in the US, but obviously in around the world as well. And I genuinely don't think it's going to disappear because of just what might happen in 2023. The fact, if we end up in a recession, they might not do as well as they said they will do. They've already told you, okay? But that doesn't mean it's doom and gloom, okay? If the stock comes down a bit more, I will be buying, okay? And in fact, that's exactly what I did yesterday. So I bought 1.4 shares. I remember I used to have 20 shares. Okay, I'll show you to prove it to you. Okay, that I did that. I will show you in a second. But I had 20 shares, so I bought 1.4 shares yesterday. And what am I going to do? I'm going to continue buying more of this. In fact, I would love to have at least 30, 40 basically stocks of these individual shares of this company, inshallah, in the long run. And that's what I'm going to do. So yeah, it doesn't look great right now, and they saying, yeah, we put our hands up, you know, we might struggle a little bit going forward, but that doesn't mean by the time we get to 2024 this is going to continue, or 2025 or whatever. If you're only investing for 1 year, then obviously that's a different ball game, right? Then you're gonna have to make a decision on what you want to do, right? I'm down 4.6% right now. but I'm cool with that. And as you can see here, you can see yesterday I actually bought 1.4 shares of UPS. I bought 0.3 shares of Qualcomm, and I bought 3.4 shares of Rio Tinto, because Rio Tinto actually went down below £50 per share for the first time yesterday. So I actually bought more shares, and they actually paid me nice dividend, I think, as well a day before. So it was actually a good time to add to the stock yesterday. So yes, as I said at the beginning, I am buying more of the companies that are down a lot right now, and that 1 quarter or 1 year is not going to change my outlook for these companies. If things go south completely for UPS going forward from now on, okay, then I'll reevaluate the situation. But right now I'm comfortable holding this business and add to it as much as I can. Next company we need to look at is 3M. 3M reported their earnings as well. Okay, let's go and find 3M. There we go. So 3M reported, and they actually beat the top line and bottom line. Basically no issues with this company. They're doing some sort of a restructuring, basically restructuring the business side of things. They're getting rid of, basically reduction of a global manufacturing roles by January. They started in January 2023. That will save them about 700 to 900 million, and after they've complete all of that. And the outlook is basically what the analysts were basically better than what the analysts expected. They were expecting flat or basically minus 3% to a flat and so on, but it's actually the company thinks is slightly better. Okay, so nothing huge to report from 3M side of things yet. The earnings for now, things are okay. They're doing some restructuring. Hopefully that will help. The legal situation is still up in the air, so we're just gonna have to wait and see what happens. But yeah, so it actually went up about to 1% when they actually talked about that. So yeah, there's nothing really huge to kind of report other than they will basically do some sort of firing, if you like, for basically kind of going forward. And I like the fact that they said here reduce layers of management, okay, and further align with business go-to-market models to customers. So sometimes it's good if there's too many managers lying around absolutely doing nothing, and the company actually needs to cut costs. Managers are probably the best basically people to start with, rather than the people on the ground and so on. But yeah, there's nothing huge to report. Another company that reported just this morning is Automatic Data Processing. Again, top and bottom B, there's not huge thing to report either. Basically expecting revenue to continue to grow as well, so it looks absolutely fine. There's nothing huge so I'm gonna dig deeper into this as well to understand a little bit more, but I've just read this very quickly. And as you can see, the consolidated physical 2023 outlook, revenue growth of 8% to 9%, which is quite good. Consensus basically we're expecting about 8.5%, so it's actually better than that, and so on. Now let's have a look at this one. This is the one that shocked me the most. This is the company that is down right now. I think they down about 22%. I'm actually shocked to see what has happened. And I read this and it said, wait, it's actually B, and this is a B. So I thought, what is going on here? Why is the company down so much? It's down so much because apparently the guidelines was actually a lot lower than what was expected. And this is it, okay? Said it expected Q2 revenue of 700 to 750 million, 700 million to 750 million, below the 760 million. So there's not much difference in terms of what was expected and what the company is basically saying they basically expect for Q2, right? In terms, and the gross margin of 41% to 44%, which basically is really, really good if you think about. Q1 net income nearly tripled. Okay, honestly, I'm looking at this and I'm struggling to see if anyone owns this stock and knows exactly what was said. If you listen to the call, please let me know, because I must be missing something. Okay, because for the stock to be down almost 22%, it can't just be the fact that it's just this bit here, because everything else seems fine to me. Okay, Okay, maybe it could be this one here, this part here. Okay, it could be that, but is that the whole? Is that a big deal? I don't even know some of these things, but it will be really interesting to find out what's happened to this company, because I'm looking at it, I'm thinking this shouldn't be a reason why the stock is selling basically right now 22%. It makes absolutely no sense. So there you have it. There's so many companies reporting, and Visa obviously is another company that reported last night. So I'm going to quickly show you Visa and Microsoft, and then we'll wrap up the video. So like I said, Visa, there's nothing huge to report. As usual, business as usual, no issues whatsoever with this company. Guidelines was absolutely fine. Top line, bottom line, both a beat. And as you can see right now, it's kind of flat. Nothing is really happening to the stock. And then you've got Microsoft. Microsoft is a funny one because it's actually a beat both, okay, and everything else is fine. But now the UK is blocking the Activision Blizzard deal, and it looks like they just have absolutely no reason to worry about. One thing I don't understand about the UK and why they're blocking this is like Microsoft is not even a big gaming company. Their revenue is from the gaming side of things is very, very small. Sony is way bigger than this company. If Sony was buying Activision Blizzard, then I would be surprised. But obviously I would be hesitant because of monopoly and all that stuff, right? But yeah, I don't know what's happened, but the stock is obviously up quite a bit because of that news, as well as obviously the fact that the company has reported a good earnings. Google is actually back. Alphabet, it was down this morning. Okay, Tesla is down for quite a bit, and then Meta is obviously tonight reporting. I think is it tonight or tomorrow night, whenever it is reporting. So yeah, just keep an eye on what's happening. But like I've always said to you guys, none of these basically earnings, whatever, matter right now, unless the company comes out and says we're shutting down or something mad is happening to the business, right? You just need to focus on your basically goals. Okay, my goals is to buy quality businesses that will be around for a long time, right? When these people who are selling right now sell these type of stocks, I will be buying more of them. Okay, that's exact. To be honest with you, I actually buy more stocks during the earnings calls and so on than actually any other time during the year, unless obviously the markets are down quite a bit. And as you can see, I've got UPS, I've got Union Pacific, as S&P Global. There's so many. Qualcomm, another great company. So many really genuinely good companies that are down so much. But guess what? Medtronics, I'm just down 2%. At some point this year, this company was down 22% or so on. Right now, only 2% down. Okay, my average is actually $92 per share. Right now, it's trading $90 per share. Again, I will love to buy more of this company, but I have stopped in the last few weeks. Companies like Cisco is down right now. Automatic data processing is down. So I have other companies that I will be adding to, inshallah. And as always, I will share it with you guys on the Discord. If you want to join us, do that as well. And I haven't actually posted anything over the last couple of days on the Discord, so inshallah I will be doing that today and tomorrow, inshallah, going forward. Sorry to making for this video a little bit longer, but I just want you guys to focus on the long-term plan and focus on what is the quality businesses that you actually already own, and sometimes use this opportunity to find quality businesses, the companies that you probably had on your watch list that are down now 5%, 6% just this week. Okay, if they've hit your target prices or whatever, then that's time to add to these companies or buy these companies for the first time, inshallah. Again, it's not financial advice. Do what you need to do, but obviously that's what I will be doing, inshallah. Have a wonderful day. I will be basically posting a couple of more videos in the next 24 hours as well. Have a wonderful day. Assalamu Alaikum.